Good morning, ladies and gentlemen. It is Friday, 4/3/2020, and I'm Bill, and welcome to Powery Mini group meeting today, the Friday group meeting. I'm here with Jeffrey, and we're going to discuss a new strategy for trading the Power Target Momentum System. And some of you may have actually seen the documentation that I posted at the top of the PowerEmini.net page. It's been up there probably about a month or so. And so basically, what we're dealing with here is sort of unusual ranges and extreme volatility in the market, as you know. And so basically, what we want to discuss today is the best way to trade the momentum system with that volatility in these big ranges. And we've come up with a pretty good strategy. And I know those of you that have been following it have been emailing me saying how well this is working. And so I'm joined this morning by Jeffrey. How you doing this morning, Jeffrey?
Great, Bill.
Cool, cool. So I see you brought some slides here, and I know that the sort of the main topic of discussion today is going to be how to really simplify the approach for trading the momentum system, especially while the market's having these big gyrations and long range days. Do you want to talk about this first slide that you have here for a minute?
Yeah, sure. Yeah, what we want to do today is hone in on what's working like right now really well. And as Bill said, it actually simplifies the process a little bit. It makes it easier to follow. The power momentum system is a great system that takes advantage of the major momentum of the session. Okay. Now, the issue is we're going to have days where the momentum is really strong in one direction, big trend days, and those are the easy days because all the you know buying or the selling pressure is in one direction. On a trend day, for instance, we can at the end we can do the math, and we might have 10 times the buying pressure over the selling pressure on average through the session. That's why the market goes up so high. In a big downtrend day, it's just the reverse, 10 times the selling uh, versus buying action. So strong trend days are easier for the system to jump onto and take advantage of. And but then we get other types of days. So let's take a look and talk about uh, the basic percentage breakdown of how of what we get in the market action day types. So if you look over there on the left, I was just talking about those super strong trend days. We get those roughly 20% of the time. And this is where the opening range of the system, as everybody knows, the system generates an opening range, and then the that range will become either the high or the low of the session, meaning the market spent the market got out of that range in one direction and spent the rest of the session just moving away from it. Okay, real super strong day. And then we typically get all the targets hit. The middle day, the weak trend day, you can expect about 50% of the time. These are going to be days that are kind of average, so they're kind of in the middle of the price action day type. And so they're trending days, but they're weak days. And we, sometimes get one or two of the targets will be hit, and then the market can fizzle. And the the thing about the trend days is that the uh, this the price action may take off in one direction for half the session, and then make a reversal and go the other direction. So we get mixed type of trading action on those types of days. The final type of day are the weak days, the trend failure days, and that is going to occur about 30% of the time. And so on a day like that, we get real mixed results, and a lot of times we get stops hit. And on real nasty days, we can get the full stop hit in one direction and then the full stop hit in the opposite direction, right, in one session. So those can be real nasty days. These types of trend failure days, there's and they typically end up being like narrow range doji bars, right?
Mm-hmm.
And so these trend failure days, they tend to have just enough energy sometimes to trigger us in, and then the whole price move fizzles and we run back down and hit the stop. So maybe the other direction, just enough energy to trigger us in, and then backs off. Then the super doji bar days, we may never even trigger, right? So those could be like a pre-holiday type of session or whatever.
Yeah, we haven't seen one of those in a long time. I
No.
mean, but it is important that everybody keep in mind that it's entirely possible that one day you will see a day where the opening range, like the price just kind of like pokes at it and stays inside and trades kind of sideways, and then there wouldn't be an alert at all that day. But it's been a
Well,
long time since we've seen something like that.
well, yesterday though we did. Yesterday we got positive movement when we hit targets, but in the beginning, if you remember yesterday, I think we tried to poke to the upside first, then to the downside,
Oh
wasn't it?
yeah,
And
yeah,
then and so the system though, because of the dynamic trigger range, kept us out of those kind of like false moves. So yesterday was really cool how uh, you know how accurate this system ended up operating. And there's a little bit of luck of the draw in there too, but we stayed out of that first attempt, we stayed out of the second attempt, and then the third attempt is the one that took off and hit uh, I think we hit all three targets yesterday. We got real close to the third target. uh, but
yeah.
anyways, yeah. So the main thing to keep in mind here to get started, just to preface our conversation for today, is the power target momentum system is a very mechanical, formulaic based type of system. It's not using all kinds of moving averages, trying to like jump onto like supposed types of setups or anything. Instead, it lays out the levels and it analyzes the market profile at the beginning of the session, looks at some of the pre-market activity, and creates a market profile early on. And you know before we had the system waiting a bit longer, and I was able to increase the accuracy of the direction picking and also get it closer to right after the open so we didn't miss anything. So but the main thing to keep in mind always is this system is performs based on the market activity. I mean, the market, a huge trend day, this thing's going to pick it up perfectly, right? It has to, because
Sure.
it's basically like a net over the market, and the more the market moves, it's going to trigger each area of that net and pick you up. And
Yeah, and so
so
this slide was this is kind of an overview, that we've used the same slide back during normal market conditions, and right now we're kind of in, abnormal, anything but normal market conditions. And so I'm going to pop to the next slide here
sure.
because this is the main topic of what we want to talk about today as far as this new strategy for trading the target system and quite frankly simplifying your approach. And if any of you guys have already seen this in the documentation, well, then you've been playing it this way. But we wanted to go over this and make sure that everybody's aware that, basically the new strategy that we've been, employing is to sell it at target one. All you're doing is just shooting for target one. When and if it hits target one, it's a winning trade, and you just hold off and wait for the next trade. And the reason for that is that with the current ranges, and I'm going to let Jeffrey talk about the dynamic targets here in a minute, but the targets are dynamic and everything's based on the ranges in the market. And so, since we're seeing extraordinary ranges right now, target one is on a typical day is in the vicinity of where target three, might have been back in the past when the ranges were a lot smaller. And
Yeah.
so, anyway, recently I went back through all of the alerts on the ES momentum system and was, crunching some stuff, and I tracked this and everything. And it just looking at my tracking, I was noticing, something that I actually already knew, and we've discussed this in prior meetings. But basically, I added it up and did the math, and we're getting target one is getting hit 80% of the time, and that goes all the way back to the very beginning when we, officially launched the current version of the momentum system on the dedicated server, and it's fully automated and all that, like back in mid-January. And so I went back to the beginning and just basically, added it up, and you can see the numbers here. And so with an
Yeah,
80, yeah.
The numbers don't lie, right? Yeah.
Yeah, and so, with an 80% hit rate on target one, and see, we discussed this a while back in one of the trainings about, it only makes sense that if you have, the system's going to generate three targets, and, the first one's going to be the easy one to hit, right? Because it's only, it's a lot closer to the alert price. And the second one's going to require the market to, make a little bit more of an extended move. And so you're going to get a little bit less of a hit rate on target two. And then, back in the day, back in January before the market really went crazy, target three would require one of those trend days that you mentioned in the previous slide where the market really
Exactly.
had a long range sort of trending move. And then, those were the days where you'd, really capitalize on a big move. But so here's the thing. In this environment, we're able to capitalize on a big move just by, selling at target one and calling it a win and wait for the next one.
Yeah, exactly. Yeah. Your analysis is really good at this point in time because yeah, I've mentioned in the past that what you want to do is treat target one always as your high frequency target. And so if you were playing multiple contracts, like four contracts, you definitely want to like take off like half at target one and then you work with the other two. If you were trading like 10 contracts, you could go as far as even taking, six or eight off at target one and then working with the remainder. So we've always mentioned that target one is like uh, a high frequency target. However, as Bill mentioned, in these market conditions with the ATRs and these like massive ranges, if you just pull off everything at target one right now, then you're doing like he mentioned, you're doing as well as you would expected to like hitting target three in a normal like kind of slower market. So it behooves you to go ahead and just pull off the bulk at target one in this market right now,
Yeah, and so the
right?
other thing that I wanted to mention real quick is that we obviously in this sort of environment, we recommend that you trade the micros, right? So the easiest way, I think, to get started, trading this system, or even if you've been using it for a while and you just kind of want to, simplify things and make it easy on your nerves, and that is to basically, trade one micro contract and sell it at target one, and put it in the win column, right?
Yeah, exactly. Yeah, here's the thing. This system, let's keep things separated here in our minds. The system is giving us, our entry levels and our targets, and it's got a system trailing stop. It's basically giving us guides. Dynamic guides for each session. Now, how we trade that is we could trade that in, half a dozen ways, and there's multiple ways you can do money management with different position sizes. But real importantly for the beginner, before you even get into any of that, like if you're new to this system and you just want to like get in and start taking advantage of this market, forget all the complications right now. That can come later as you get more experienced and you start building size up. Then you can go and figure out like how you can position for all the different targets. But if you just want to come in here right now and start taking advantage of this market, no frills, no hassle. You just, when you get the trigger, and you don't even have to look at a chart anymore because the system notes tells you when it's a confirmed entry. You just drop a contract in, place the stop, place the target, and with that 80% win rate, we're doing pretty good. So that's the easy way to get started. And then you might say, well, what if I want to get better profits? We'll just stick with this exact same simple plan, but after like a week or two, make it two contracts, right? And still just take everything off at target one. That is going to be the easiest way to jump in right now and no headaches. We're going to show you a couple of ways to enhance this strategy as we go to the next slides. Do you want to say anything else about this, Bill?
Well, I'm going to pop over to the next slide, and then I will mention that trading the micros is extremely important because the full size contract, I mean, with the types of moves we're seeing now today's a little bit different. The market seems to be a little bit calmer today, but some of these moves, and I expect this volatility to sort of, to continue and to pick up. And an interesting thing that I noticed when I was crunching all this data out is that Target One is, I would say, going back to like when the market started to fall, right? When this sell-off started, I've noticed that Target One is ranged between like 9 and 36 and a half points. There was one day back there where Target One was 36 and a half points, right? And
Crazy, yeah.
so, when you think about it, if we're talking like ranges, like interestingly enough, today, like as we speak, Target One got hit, and it was only seven. And I say only, only 7.5 points, and that's like been the smallest Target One that I think I've seen in like 3 or 4 weeks, to be honest with you. But under
Yeah.
normal circumstances, right? Like back when the market was kind of dull, 7.5 points would have been, a pretty significant move. But anyway, with, ranges from, say 7 or 8 points, out to like 30 something points for target one, it only makes sense that you're trading the micro contracts. And like Jeffrey said, even if you're doing good with it and you're building your account up, then you just add another micro contract. I would avoid trading the full size contract in this
Well, if somebody's
environment.
super experienced and been doing this for years and they're super well capitalized, then they can do what they want. But
Sure.
anybody that's new to this system, yeah, just start with the micro, pyramid your way up. And here's how simple it is, and we can get into this at the end. But start with one simple micro contract. You can't get hurt too bad with a micro contract, and just parlay that into bigger sizes over time. So if you're on like one micro contract for 2 weeks, you show a good profit, then add another. That way you can be adding, two contracts per month. And remember, once you get to 10 contracts, micro contracts, that equals a normal size contract. So then you can switch up to that. So it's the micro contracts in the E-mini were the greatest invention since sliced bread, pretty much, and really helps out new traders because the leverage on the full size contract is just hard to get through with any kind of learning curve.
Well, and the margin on the micro contracts is a lot smaller too. I mean, what is it, like $500 or something?
Well, I don't. The different brokerages have different leverage amounts, but margin amounts.
Hmm.
So I don't know if we can pinpoint that, uh, but anyway, let's get into the targeting here and talk about what the little modifications to your strategy, your money management strategy is. The system is designed to generate a market profile snapshot, and I use this term market profile. These are all like our own formulas. They're very unique types of formulas that figure all this stuff out. But just in your mind's eye, think of the concept of market profile. What it's doing is it's taking a look at how the market opens, and then it also looks at the pre-market activity, and it forms like a profile. And it's looking at some other, things as well, like previous, high and close and that kind of stuff. But it forms a profile, and then not only does that then help the system determine where our entry trigger should be, right? The goal of this system is to try to pick the main momentum of the session. But as you know, sometimes the market can't make its mind up in the morning, right? It goes in one direction, then it pulls back, goes another direction, then it goes back to the middle. And so it's him hawing around, doesn't know where it wants to go for the day. So the balance, the tricky balance is we want to try to get in the initial move, right? The initial launch of the momentum move, but we don't want to trigger in and get faked out and get sucked in too early, right? Because then we can run down and hit a stop. So delicate balancing act. And so the system does that. And that's where we get our trade barrier from. And then right at the same time as that trade barrier, and we've got the market profile, the system is able to analyze like the previous volume and the previous ranges and everything, and then with some really cool formulas we project out 3 dynamic targets for the session. All right, and so the neat thing is that the dynamic targets will expand and contract with along with the market ATRs. If we got kind of a dull market, for the previous day, and it's opening kind of dull, then we don't want to swing for the fences because we may never even make any kind of large price moves. So the dynamic targets then would be computed with tighter ranges so that they're more achievable, right? And if the system is detecting, large volume, large ATRs, lots of action, potential action, then it's able to project out much bigger range, a much bigger price targets based on the market ATRs. And so that's exactly what, as Bill said, we're seeing now. Now, the concept is that, yeah, target one is always going to be a high frequency target because it's just the closest one. And in big, super strongly trending days, we're going to just keep going, right? The train leaves the station, it just keeps going. It's going to go right through target one, right through target two, right through target three, and then sometimes further. The system is set up with a trailing stop so that if you do adopt the approach where, yeah, you take like most off at target one, and then maybe some off at target two, and then you leave a contract or whatever in the market just towards the close, you got that trailing stop. And again, we haven't seen this too much recently because we've had just such a volatile market, big up and down moves and big V reversals and whatnot. But on the super strongly trending days, and we did have a couple days last month, I believe, where just holding all the way into the final 30 minutes. Uh,
Hmm.
let's see, hang on a second, I'm getting background. Okay, the just holding into the final 30 minutes of the session is where you're getting out, at the extreme of the daily price bar, right? So you're capturing, and the trailing stops will start to tighten into that right into the last 30 minutes. So that's an option too. Uh, Sometimes we can go way farther, and just think also one of the overall uh, uh, advantages to this system, and uh, one of the things that helps increase the overall odds is when we do get like massive like sell-off days or big super rallies, this thing can keep you in for the whole run, and then that just wrecks in a lot of points. Okay,
Yeah,
that's
another thing I wanted to mention is in this current environment, because basically this little group meeting is, my suggestion is that you kind of get your mind around the idea that if you just simplify it, go in, shoot for target one, take it off at target one, and wait for the next one. What I was about to say, Jeffrey, is that back in the day, when we first launched the system, you would typically see one alert per day, and then there was occasionally maybe once a week you'd get a second alert, sometimes later in the day, and that. But with this type of volatility and action that we're seeing here, I've been noticing that we're getting 2 or 3 alerts per day on sort of a regular basis. And so I mean, that's where it sort of dawned on me here that that taking it all off at target one is going to work out pretty good, because you may get 2 alerts, you may get 3 alerts that all hit target one on the same day.
Well, right, yeah. In these big wild markets where we're swinging, 3 and 4 times in each direction, we've had days that we hit target one every time we break out of the trade barrier. You know better than me which exact session that was, but there was a session where we had like probably 3, if not 4, target ones hit in one session. So but anyway, with the background on how the trade barrier works, how the targeting works, and the general idea of the system is to not worry about every single wiggle And this is not scalping. We don't have to sit and do, super razor fine focus on every price move. We're plopping contracts in, we're setting a wide stop, we're letting the big, market drift or market momentum, any kind of rally or any kind of big sell off carry us along is what we're doing. And we will have days, and we've had plenty of these, you'll see them, where price can wiggle all around through the session, right, Bill? And like even sometimes we've had days where it comes one tick to the stop and then turns around and then goes in our favor and becomes a big day. So the point is that if you'd been sitting there, biting your fingernails about every like up and down move, you're going to be an emotional wreck. However, if you just walked away and followed the numbers, everything worked out. And so this system is supposed to be, it's designed to be easy on your nerves, kind of emotion free. That's why you want to start with the micros and build up, and then uh, it'll work out for you. Now back to the targeting, the target one. 80% of the time now, the target one is getting hit. Now that's a really good um, odds, right? And this is not about bragging how great it is, because what we're saying is we're just hitting target one, and it just happens to be 80%. So therefore, to keep the odds in your favor in this environment, just shoot for that first target. Today we hit the first target on the. I mean, actually, today was another day where we tried to break out to the upside. The system kept us out, and then we finally broke out to the downside and ran down and hit the first target. Right?
Hmm.
How many points was that, Bill? Today, do you know?
Well, I'd have to, I mean, I'd have to pull up the
Oh, okay.
software, but anyway, well, I think it was like I said earlier, like 7.5 points or whatever.
Today.
But
Okay.
you want to talk real quick about, just for, real quickly, a review of why we wait for the 1 minute close past the trade barrier so that we don't get sucked into a false move, because today was a good example of that.
Yeah. Well, the way the system is designed, if you think about it, the system's basically doing all of its number crunching and quanting out the market profile and giving us the levels. And so we have to have some way for you folks that are following this system at home to have like, an official confirmed entry. And so what that is we wait for a 1 minute bar to close past the trade barrier that's generated by the system. And so once that's done, the easy way to do it is you just drop your contracts in, right? You don't have to think any more than that. You just drop them in. The system in the alert in the system notes now sends a confirmation through that the 1 minute close has been achieved, right? So it confirms that. And again, so that's the way I designed the system and calibrated it so that that 1 minute close past the barrier would be the ideal time to jump in. So,
Yeah, it's
and
the
the
entry
easy,
trigger.
yeah, it's the entry trigger. And so, just keep that in mind, that what you're doing is if you're using the Ninja system, you're going to have the trigger line on the chart, and if not, you just plot a horizontal line, a red line or a green line at that level, and all you're doing is you use a bar chart. Just look for one close past that, and as I mentioned, if you don't even have to look at charts because the system notes confirms it, and so you could fly this system on instrument panel and never even look at a chart, right?
Hmm.
Yeah. I mean, that's pretty cool when you think about it. Never have to even look at a chart, and all you do is you drop your contract in, set the stop and set the target, and then follow the system stop, and that's it, right?
Oh
That's
yeah.
you could get that basic.
Very, very
So
easy. So let me pop over here to this next slide that you bought or that you brought, because it's basically going to talk a little bit about one of the things that obviously people are going to bring up is the fact that the initial stop in the morning tends to start off fairly wide, and quite frankly, with the 80% hit rate, and I've done the math and looked all through it and everything. And so even if you were taking that, and sometimes the initial stop is extremely wide. Even if you were taking a full stop out, you're going to do good, right? But as Jeffrey brought with the slide here, we're thinking that maybe a little bit of proactive management of your stop will reduce your risk a little bit.
Yeah, because here's the thing, right? You hit the nail on the head. Somebody might look at this and say, "Well, wait a minute. Target one is, 7 points, but our stop today was 20. That doesn't make sense, right? That's too, And so, uh, the the fact that we have the 80% hit rate helps, right? Because that's going to offset the times that you even hit that full stop. Also remember that it is possible, depending on the price movement, for the system to get you either real close uh, or near break even before it would fail and come back before you'd hit the target one. Now, in this kind of crazy market, it's just, we're swinging every which way, and we're seeing all kinds of stuff. But the concept here is this: if you want to take a little bit more active role, and what this does for the new, the new person that's just starting with this system and trying to get their head around how it works and everything, what this does is it minimizes the risk, especially in these very wide ATR markets. What was the widest range that we saw generated during all this market turmoil over the last 3 weeks? It was do you remember, Bill?
Oh well, I mean, there's been like 10% up and down days in the market, so
Well, right, but
and
well, I was
six
saying
percent.
we had like a in the I've been looking at all the different symbols. I'm trying to remember what, but we had like, uh, I think like 30-point ranges, like,
Oh sure.
yeah. And so if you're taking an entry and then the system says, okay, put your stop 30 points away, that's can be a big hit, is what I'm trying to say.
That's a good reason to trade the micros too. I picture 30 points on one ES micro contract is not a huge big deal.
Not catastrophic for most people, right?
Hmm.
Yeah. So anyway, here's what I'm going to recommend if you want to take the extra step and do a little bit of money management. It's not a big deal. Um, but if you're going to follow this strategy and then just shoot for target one thing you can do then is see the system is looking at the market profile and saying, okay, we're going to take an entry where we have really good odds that we're going to move in that direction. And our whole goal is to stay in, right? We don't want to get wiggled out. So we're going to stick that initial stop like way outside of all of the market action of the session, pretty much. Okay. And only when we start getting some movement in our favor, we're going to start inching that, below the price, and it'll start tightening later. And it's fine tuning. We don't want to get wiggled out early, because a lot of times there's a lot of up and down gyrations and churn before the big move can get started, and we might already be in a position and the market's churning around. And so the goal is just to stay out of harm's way with the stop. Now, again, in these big ranges, that initial stop can be, you know, uh, quite wide, and you can be a little bit gun shy about that. So one thing you can do is say, okay, what I'm going to do is protect the midpoint. Okay, and here's how that breaks down. I don't have a slide that shows this, but just in your mind's eye, what's going to happen is we're going to end up with different scenarios. Okay, one scenario, let's say that we're going to follow this new approach here. We trigger in at the trigger line, we go for target one, and we're going to place our stop below the midpoint. Now, you can either move the stop there, or that can be your mental stop. Like, you can have the initial system stop in, but then you can, decide to knock out. Because remember, sometimes we get little spike downs and spike ups, and then everything goes back in your favor, right? So that's the one caveat. But here are the scenarios. The first scenario is we get in at the trigger line, and price just simply takes off and runs and hits target one. That's pretty much like today. Okay. I don't think we had in all of the symbols, I don't think we had any kind of like uh, pushback or anything. I think we just ran right towards the targets today.
Yep.
Yep. So today was an easy one. Another day might back off and then wiggle around quite a bit up in the top of that range between the trigger line and then the midpoint. You might wiggle around in there and then take off in their direction. Okay. So far, so good. No harm, no foul. We're still hitting target one. The next scenario is where we would come down and uh, uh, blast all the way through and hit the big initial stop. So in that scenario, it is better that you took the stop at the midpoint because you cut your losses in half on that particular attempt, right?
Hmm.
And then so finally we might get it. We might get a scenario where you trigger in, you come down, a little spike down hits the midpoint, knocks you out with a loss, and then goes right back up to the trigger line and takes off and goes on its merry way. So guess what? You just do a re-entry on the next 1 minute close back up above the trigger line, right?
Hmm.
And uh, what happens is, think about it, you actually are getting 2 tries in the direction of target one for the same cost that you would have if you just followed the initial system stop, right? You just have to do a little bit more work. That's all. You just have to take a second entry. So I think this is a good way to go because, uh, you know, uh, one of the other scenarios is the market does drop, knocks you out, and it would have hit the big initial stop, and then it goes the other direction, and we get a move in the opposite direction. In other words, we never hit the target one long. We're going to break out and go the other direction. So that's another scenario. But if you follow what I've been saying here is, if you do get knocked out, it's as simple as you wait for a new 1 minute close back above the trigger line, and then you just reshoot for target one. And even if you get stopped out again at the midpoint the second time, it just equates to what the initial stop would have been anyways if you just did one try. Does that make sense? So
Absolutely.
yeah. And so what tends in this market then, our target one then tends to be further out than what the stop distance is to the midpoint. So it kind of throws the odds in your favor a little bit. And like I said, the only issue is you just got to do a teeny bit more work and take a second entry. That's all.
Sure, sure. Yeah, this is a wild market. Like I said, there was one day back in, I think it was February, where target one here was 36 and a half points, if you can visualize that. And so, I'll have to go back and see if I can figure out like what the stop was at the time, because obviously that was probably one of the longest range days that we've seen in a while. But yeah, this strategy of just shooting for target one. And the thing of it is that I actually had somebody I corresponded with Jeffrey that said, "Oh, this is great, but then I see target two got hit, and I think, oh, I could." And so it's kind of a mental thing. And if you can be happy with, just locking it in and hitting target one, then you have a really super high probability of that, as opposed to, and then, someday the market's going to settle down, and then the ranges will settle down, and we'll get back to, the original sort of strategy that we've always used, where, we're playing the primary trend days and the big, the long range days and that. But for right now, I think that this is the perfect way to do it, and it's real easy on your nerves, and that way, and plus you're getting more alerts, right? And so, instead of just getting one alert per day that you're playing. But I really like the way that this system kind of allows you to, like you say, fly by the instrument panel, right? It's not designed to trade the ups and downs and the wiggles. If you just follow the system, the numbers don't lie, right?
Well, exactly. And again, the way to think about this is all mechanical based, very formulaic and very uh, step by step. So you can just follow the numbers, and it quants out over the series of plays, right? So obviously, like, the first day that you come in or the first day that you turn on the system, uh, it could perform uh, not so great, right? We get some stop outs or whatever, but over the big series, day after day after day, we have high percentage hit rates of target one. And so, again, just kind of in summary, for the new person coming in, start with the micro, shoot for target one, follow some of these tips we gave you today, and you'll do fine. And then just pyramid your way up. And as Bill was saying, if the market drops back to, being slower and duller, uh, this strategy will still work. Because remember, uh, the way that you can make more points is not to have to take more trades or shoot for bigger targets all the time. Just you increase your size over time. So this strategy that we're showing you will work now. It'll work in the future. But if you do get out to where you're trading multiple contracts, then you can front load everything to come off at target one, and then at that point, like I gave you an example. Let's say you got up to 6 contracts, you take 4 off at target one, or even 5 off at target one. You let just one contract dangle and see what happens, right? That kind of strategy, you're putting the bulk of your firepower towards target one, which is high frequency, and then you can leave something dangle in and maybe catch something real big. So that's all I got really to say about what we're talking about today.
Yeah, yeah. Just the very last thing that I wanted to mention here is, well, I've pulled up an actual live, the software live here, right, as we're doing this, and so I just wanted to. There's a couple of people out there that, when I said something about making sure you're following along with the system notes, they're like, oh, what are you talking about? And so I just want to make sure that everybody's aware that you always want to have the system notes open, because the software is automatically going to give you the play by play and write out a system note each time that something happens. And so that's like extremely important. And, that's what makes it so easy to follow along with, is the fact that you got these system notes. Because, somebody new gets the software and by default, they open it up the first day or two or whatever, and they don't really think to click that button, right? And so they're kind of missing out there. So I did want to, I did want to like
Yeah.
bring that up and mention it, just because, we do have some new people. And so basically, you can see what transpired today. The system comes online 5 minutes after the market opens, and it generates the dynamic trigger range. And then obviously, if you've watched some of the training videos, it's looking for a break out of the range. And here's the thing: is so one important thing, this 9:45 alert never actually triggered in, right? Because we never got the 1 minute close past the barrier. And so
Exactly.
and
Yeah.
so as the price was trying to escape out of the upper end of the dynamic trigger range, it never quite got enough, momentum going, and so it faded back in, and this one never triggered. And so then, the price literally in one 5 minute bar. This is pretty interesting. If you have your trigger range plotted on the chart today, you'll see that there was a 5 minute bar that literally went from the top of the range to the bottom of the range, right? And then once, the very next bar, it started trying to escape out of the bottom, and that's when the short alert came on. And then you'll see 3 minutes later, we actually got the 1 minute close. Yeah, 3 minutes later, the 1 minute close below 2,500. And then, of course, it took a while to come down and hit target one. So there you go. There's
Yeah.
everything you need. Real simple to follow along. And of course, then you posted the system note in here. And while we've been doing the show here, target two actually got hit, and so you can see the trailing stop is also continuing to move down. So
Yeah. This system, by the way, is what inspired me in the beginning. Is I came across uh, designs of how, like, the institutions kind of play the sessions, and I started extrapolating off of, how can I simplify and basically kind of dumb down the approach, but still, it's still plenty sophisticated. And this is really one of the best, industrial strength type of institutional type of systems you're going to find available to play. It really is. We've had a long evolution on the development of this, and so our numbers are really, looking good at this point.
Absolutely. So anyway, that's the there's a page if you click the tutorial button just like you did to get here. There's a page that's kind of like front and center at the top about dealing with the current market conditions and wide ranges. And so, a lot of this is spelled out in there, and it's been in there for quite a while, but we just wanted to kind of do a quick group meeting and make sure everybody's aware of this. And so I want to thank you for showing up today, Jeffrey. And if anybody has any questions on any of this, you can feel free to shoot me an email. Let's see, on the show page, there's actually a link right to the email. And of course, everybody's got my email address. So any questions on this would just let me know. And as we speak, Jeffrey, the we're talking about selling at target one. I mean, we're like literally, probably we're just a point or so away from oh, I think we just hit it. I think we just hit target three, right? Look at that.
Yeah.
Look at that as we speak here. So, well, so I mean, let's look at that. So the price barrier was 2,500 even. That makes it pretty easy to do the math, right? So we just hit target three, and what's that? 24 points, or I'm sorry,
We look up at
26 points.
Well, yeah, look up at your
Yeah.
traction meter right up
Well,
above there.
that's going to be the maximum traction, but
Yeah.
yeah. So there you go. So hey, today was a pretty good day to do the group training, and the system hit all three targets. Only one alert so far today, and so, but here's the thing: it would almost been better if we had just hit the first target and then kind of everything reset, because the whole point of this is I highly recommend that you shoot for target one, and then you hit target one in the morning or whatever. Yeah, call it a day. Come back the next day.
Yep. Yep.
All right. Well,
All
hey,
right,
thanks
Bill.
for showing up, Jeffrey, and
Very
we'll have a
good.
recording of this up at in the knowledge base of the software. And like I said, if you have any questions, just let me know.
Very good.